we are going to be talking about, compliance in real time, or you can see digital resilience in real time, combating fraud, money laundering. And I thought a good place to start might be to look at what the problems are, ideally. And, clearly digitalization has changed criminal behavior in a lot of ways. And so I think perhaps, so Rob, having been at the coalface in a sense, or on the criminal front, what are the behaviors, perhaps in your time particularly, at Europol, that you saw start to surface?
What is really interesting is that the threat landscape on cyber, for example, hasn't actually changed much in many respects. We have cyber criminals that are reutilizing the same traditional malware tools to steal large quantities of personal data, including, of course, banking credentials, dump it on the dark marketplace for fraudsters to use in a secondary way. And, they're doing it at a higher scale, certainly, but the illegal acquisition and exploitation of personal data is what's driving the heart of the cyber criminal economy. That said, at the top end of that criminal piece, we see, certainly in the last couple of years that I've been noticing, an emergence of a much more aggressive strain of criminal behavior, higher powered, high-end cyber capability, professional money launderers, for example, operating in a sophisticated way across a global criminal architecture. And so at the top end, the threat is becoming more dangerous and towards the innovative use of social engineering, more bespoke malware tools, for example, to directly target bank transfer payment systems to take over the control of ATM networks. And so it is a more complex piece, more challenging, and that, of course, is a worry for all of us, I think, in financial and other sectors.
And how might a criminal network go about those sort of practices of trying to take control of an ATM network, for instance?
Yeah, I mean, it's typically social engineering. It's exploiting, of course, the fact that we are now increasingly part of a global digital ecosystem, of course. And the more we have longer supply chains, more complex interactions, the more we're exposing ourselves, of course, to the possibility of being exploited in different ways. So supply chain integrity is very, very important. The risk of collateral damage, as we saw from what is now the famous Non-Petty attack a couple of years ago, large global companies, not even the intended target of that, nonetheless picked up this virus and had their IT systems wiped. So I think there's a residual threat in the ecosystem which says something about how we need to, I think, improve our systemic resilience. One notable feature, by the way, particularly in the banking sector, is how there's a convergence of the criminal economy. So cyber criminals, fraudsters, and money launderers acting much more together as part of the same criminal syndicate in a sophisticated operation. That's important because most banks are still separating the way in which they're managing those risks. And I think we need to learn our lessons and build our own more integrated architecture to deal with that.
Have you found similar issues working at Standard Chartered that, or are there things specific to the challenges you confront within those sort of new occurrences that Rob outlined?
Oh, absolutely. There's definitely a convergence of all types of financial crime enabled by corruption as well. So we've actually changed our target operating model in our bank, and our financial crime compliance team now also looks after the fraud unit. And we found that to be extremely helpful in bringing together the convergence of cyber risks with traditional anti-money laundering techniques. We also developed a unit called Cyber Financial Intelligence within our financial crime compliance team and hired individuals that have good skills in understanding cyber risk, working more closely with big data analytics, and I think augmenting the traditional skills that financial crime compliance teams have.
We obviously have seen, an upswell in new kinds of technology used in financial sector. These new payment systems, Adyen, Stripe, plenty more besides. Very highly valued companies, particularly when they go public. Are those also new vectors for attack, and how are people using this? I don't know if you want to chip on that one.
I think just as consumers are having their experience digitised, so criminals are leveraging this sort of digitisation as new opportunities arrive. And we've certainly seen new types of currencies being focused on. You look at initial coin offerings in cryptocurrency markets. These tend to be less mature organisations, so present a more attractive target to criminals. and we've seen some quite big frauds in that area. I think it's quite interesting looking at PSD2, which is very active right now, looking at the way that the authentication standards are changing. It's been a good opportunity to remind new payment providers making use of open payment platforms to look at their authentication mechanisms. That's a good thing. Are they all getting it right? Some are, some are not. And where they're not, that's where criminals are exploiting it.
I think it's a very good example, cryptocurrencies, of how more advanced criminals are very adept at exploiting new technologies almost before they're being used in the regular way. Cryptocurrencies is the primary reason why ransomware has become a dominant malware problem for thousands of companies around the world, because it's given the criminals, who have long since been engaged in the business of extorting businessmen, for example, now a more anonymous means to do that, a safer way to do it at scale. And that's the primary reason that's driven the ransomware rise. And there are many examples like that about how technology are turned against us by some of the hardest criminals out there.
Sort of like criminal entrepreneurship is a good way to think about it. It's almost inspiring. I wouldn't ever encourage anyone to go out and commit a crime, but it's almost inspiring the way.
Well, that's good to hear.
I hope everyone's taken a note on that particular one.
Don't do it.
But in the prior panels, we were talking about some of the benefits of faster payments and financial inclusion, some very real value that digitization has offered. But similarly, if you're in a risk function, you have to be aware of the new criminal risks that are presented by some of these new payment methods. So one thing to consider doing is having a structure in place where new payment methods are looked at collectively in your organization and not onboarded into multiple different segments, and having a centralized risk control framework and onboarding standard over new payment methods. That way you can make sure that you tailor your controls appropriately. New payment methods, a lot of them, they tend to aggregate their payments, so you don't have the same transparency in originator beneficiary. So that requires different techniques in monitoring, as well as different KYC standards that you might apply.
What might some of those new techniques in monitoring be, for instance?
So it's really quite difficult to monitor with an automated solution over aggregated payments. So one strategy that we've deployed is really doing solid due diligence on the counterparties that the new payment method will be engaging with, and where necessary, limiting the counterparties that we'll transact with, so that we really understand exactly who the counterparties are, because we may not be able to see all of that information in the actual payments. So
to break that down in the simplest terms, like working out, so if Adyen or works with Uber, or it works with Shop X on Cannon Street, is that the sort of example that you
Right, and really understanding their universe of providers and vendors, and we as a financial institution understanding who those vendors are and how we want to engage with them.
And what sort of visibility did those new, methods offer, and how does that differ from, sort of legacy approaches that have existed?
So, there's been now probably decades worth of transaction monitoring detection solutions put in place. Every bank is running automated solutions, especially in a correspondent banking business. You have scenarios that are looking at originator, beneficiary information and anomaly detection. Because these new payment methods don't give you that same visibility on originator, beneficiary, you have to adapt new solutions.
Clearly, part of the issue here is, as we see these new products come up, and therefore the new, criminal entrepreneurship, as you put it, it's hard possibly to identify where these new problems are likely to occur. And each of you, interestingly, sort of represents, at least historically perhaps, different parts of that ecosystem in terms of, the financial institution, perhaps a third-party supplier, and then law enforcement. And I wonder how you think each of your respective, backgrounds fits into that. Like, who identifies the problem first, for instance?
Well, most of the intelligence, if we can call it that, would typically reside in the intelligence community in the law enforcement area. They have greater legislative powers to collect more data. And, I'm, in my former world, was in the business of not dealing with the problem per se, but chasing the criminal or the terrorist. And that taught us to be much more intelligence-led and to use our data in a powerful way, to train our systems of control in a better way. It certainly worked in our counter-terrorist world. What I see in transaction monitoring, for example, Trish was talking about, is that isn't as targeted. It's not as laser-like. It is a relatively blunt instrument. And I think we have to get better at unlocking some of the data that's held by public authorities, combining it with very powerful data sets in the banking sector, and create, therefore, a different information sharing platform, which can drive a much more effective response after the criminals, not just the payments, of course. Because in the end, this is about dealing with criminal behavior, and I think it has to start primarily in the public space.
So if they're, in a hypothetical scenario where you guys, all three of you, for argument's sake, are sitting around a table, how would that conversation evolve? Would you say, we've identified this problem, and perhaps Patricia, you could guide us through that?
Sure, I think it's also really important that the jurisdiction where you're sharing information has the right regulation in place for you to safely and legally share information. And so that's something that we're working on. The U.S. is a great example where they have 314A and 314B from the USA Patriot Act, and more jurisdictions around the world are now starting to modernize their legal framework to support that safe sharing of information, bank to bank, law enforcement to bank, and have that sharing ecosystem. And that's absolutely critical, as Rob was saying. Right now, we're not winning the fight against financial crime. If you go back to 2011, there's a statistic that there's $2.1 trillion of financial crime proceeds available for laundering. That's going up year on year. There's more criminal access through digital channels, and so there's significant proliferation. So we need to find new ways of working together. Intelligence-led is the way to go. There have been some great law enforcement success stories that have come out of these information sharing models. For example, the takedown of a major e-commerce platform for human trafficking. Good progress with nuclear proliferation in North Korea. No bank is going to be able to solve those types of issues on their own or file SARs that will unlock those types of cases to a level where you can actually make a difference. But through information sharing, there's real progress being made.
And by the way, just $2.1 trillion worth of financial crime profits. And more recent studies have shown that we're seizing, through our current regime, barely 1% of that each year. So the system is not working, certainly not as well as it can. It is powerful, but it needs to be trained and targeted in a better way through the kind of information sharing platforms that Patricia's talking about. And there are models that we're working on at Deloitte as well, with many in the sector here in this country, across Europe, as well as in the US and Canada. I think that's the way to go.
So, I mean, I'm sorry, but I just want to pick up on this hypothetical conversation then. It seems as though normally the avenue would be you spot something and then you go to a bank or a financial institution, you say, you guys need to keep an eye out for this. And then I suppose you would come into this scenario where?
So there's often a thematic that emerges, and we're taking a broader look and supporting our customers in looking at specific behaviours that are emergent. Mm-hmm. We participate in some of those sharing networks, so the FSI-SAC, for example, a great example of a collaboration organisation.
So what is the FSI?
So it's one of the, set up originally by the Department of Homeland Security in the US. It's a specific forum for sharing electronic threat information between financial services institutions. And it's a very effective network, and it's not the only one. There's several in the financial services space. So by participating in these sharing groups, we can talk about the general trends, but what we also do is look at those on behalf of our clients specifically. So look at their attack surface, look at what they're presenting on the internet and how a criminal might exploit that. That's really where we can come into our own and support our customers in dealing with sort of specific risks to them.
And I mean, are there any specific red flags that you notice, or is it simply that where there are patterns? What sort of patterns of behaviour would be a red flag?
I think it's important to highlight good news, right? So things like SWIFT, for example, have made significant progress against some of the sort of direct threats to that particular platform, and the process improvements, the increased controls that the SWIFT organisation has worked with its members has definitely had an impact on that particular vector. Unfortunately, just as we've talked about supply chains sort of growing, so too is the payment infrastructure that can now be targeted. We're seeing it move downstream. We're seeing a lot more disintermediation between the consumer and the service, and criminals trying to get in between the two parties. And some of the innovation that's come about trying to disintermediate that is really impersonation and identity playing a really important role in that.
And Tricia's example of human trafficking is a good one. I mean, I think the work that Standard Chartered Bank, many others in the industry have done to deal with, quite a specific problem and an important one in society, of course, and to understand what the typologies are of the payment system, of the proceeds of human trafficking and how they're pushed through the banking network, and trying to therefore identify rather more precise typologies of the red flags, using therefore the power of the control regime of anti-money laundering, transaction monitoring, really to get a handle on that. That's been a good success by and large.
Can you give a concrete example? What is if in the human trafficking example, like how would you spot something like that?
It's quite tricky because some of the indicators of human trafficking could also be indicators of illegal wildlife trade or gun trafficking. But some of the things we look for and we train our tellers in our network in Asia, Mideast, and Africa to look for include one-to-many type payments where you have one originator paying multiple beneficiaries in countries that might be at a higher exposure for human trafficking abuses. When you're doing monitoring of electronic payments, you can look for different corridors between centers that originate the victims of human trafficking and the destination countries. But getting back to the intelligence-led model, red flags can be helpful as potential indicators of unusual activity, but we really struggle to find the signal in that noise. It's only when we come together that we're able to make a difference. One area, though, where I actually see more potential for red flag detection and anomaly detection is in fraud prevention, because unlike other types of criminal activity where there can be many different suspicious indicators and it's not quite clear what it is, at least from the piece of the puzzle we see, fraud is binary. Either it is a fraud or it's not a fraud. So you can get good feedback if your detection scenario is effective. Whereas all of these scenarios that we're running for anti-money laundering, we don't have that regular feedback from law enforcement that we've actually detected something that was true money laundering. So SWIFT, I think, is making some really positive advances in rolling out technology over live payment screening to stop real-time fraud.
I mean, prevention clearly is better than better than sort of retroactively punishing or unraveling things. I mean, like, what are the sort of standard checks that we've had for checks and balances we may have had for 5, 10 years or more? What's the sort of status quo, has been the status quo? I don't know.
I guess if you look at authentication, that's sort of an area that's changed massively over the last few years. We in a world now, there's 14 billion stolen username and password combinations, and we all use the same usernames and passwords for things we shouldn't, but we do. And I think what we've seen is a big improvement in the way authentication takes place, and we're looking at where stolen identities are being reused more effectively, and that is helping lower the problem for people using stolen identities to commit fraud. So that's sort of one area where we've seen a bbig shift.
I mean, I guess I'm keen to get a sense of like where it was to begin with, and then the things where we're changing to ensure that we're keeping up to pace with the criminal innovation. And I mean, so if I think of the consumer side, well, I guess we have passwords, but are there things going on behind the scenes that we may not be aware of?
I think because of this convergence of fraud risk with money laundering risk, we are making some advances. So you mentioned the FSISAC, which actually is 20 years old. It's in cybersecurity and fraud protection. There have been consortiums in place now for 20 years. So GMLIT and other information sharing networks receive well-deserved recognition for bringing together information sharing to fight financial crime. But if we take a step back, this is a model that works. We know it works in fraud prevention. But one of the things where we are doing better is taking some of the lessons from cybersecurity and fraud prevention and then looking at how we can get better at detecting money laundering. So, for example, most banks have really good infrastructures in place to identify and repel unlawful intrusions into retail-type accounts, right? You can understand if the IP address that's accessing the account isn't associated with that account. But what we're now doing in our new target operating model, where we're bringing together fraud prevention with money laundering, is we're looking at what we've identified as an unlawful intrusion, looking at those digital footprints, whether it be IP addresses or other digital footprints, and seeing where we have those touch points in other parts of our bank. It could be connected to a money mule network. Are some of our account holders associated with those IP addresses, and connecting those threads, which historically hasn't been done?
Because actually that leads into something I want to ask about, whether, to what extent machine learning and AI can help this stuff. I don't know if that's something that you've been particularly active in.
Yeah, I mean, at Deloitte, we developed, we use machine learning extensively, just beginning to trying to understand how we can use AI better, of course, to help to interrogate large amounts of data, of course, and find those non-obvious connections, for example, in criminal patterns, and that's certainly been useful. What Tricia's also talking about is how we're starting to be smarter. We're not just about using technology like AI in a better way, but also understanding, thinking through what the problem really needs us to do. And that's symptomatic, I think, of a positive trend in the financial sector towards one that's adopting much more of a culture of security by design. And that's really important. So when we rush headlong towards digital banking, we're not doing it without thinking every step of the way about what the security issues are as well. And that maybe was something that was missing in the past, and it's becoming much better. And that's an important cultural shift, which will help us, therefore, as I said, to be smarter going forward.
I mean, when we think about, artificial intelligence and machine learning, you often hear people say it's all about the quality of the data. And I wonder, do you have a sense, what constitutes good data? What constitutes good quality data to train these systems?
It's a sense of accuracy in that data. So it's very easy to... So one of the things we do is we create needle-rich haystacks. So we try to identify hay very effectively, so we can throw it away, and we're left with really high-value data that we can then do something with. And actually applying AI to that filtering process leads to opportunities, but it only works if you've got a good training set to actually train the algorithms.
But is it sort
it's
of
also, sorry to jump in, because you make a very good point, also in terms of privacy, which of course is a much more compelling requirement on us all today. When we go after the right kind of data, and only the right kind of data that we need, whether or not it's to process a more operationally efficient solution, it also delivers a significant part of the conditions of privacy. The principle of proportionality, therefore, is applied much more. It's not a large sweep of any old data, it's a more targeted use and retention of the right kind of data.
But I'm sorry to take this down to a way more basic level. I mean, in a sense, like, are you looking at transactions? You look at it, 1 million transactions, and you know that 1,500 of those were problematic. And I mean, is that the sort of thing, or what else might there be? So Rob has to go for another panel. I'm
on the plenary speaking in a short while. So
thank you so much for your time.
Sorry for the disruption. Thank you.
Thank you.
To give maybe a quick clap of the hands to Rob, but we'll carry on for a minute or two. Yeah, sorry. So returning to the quality of data issue.
So I think having large amounts of data that you can sift through efficiently, and knowing where... So what we have is our experts go through data which is perhaps unknown,
but I mean,
we turn it into something...
The thing I'd like to know there is, what is that data? Like, what is the data that you're looking at?
So in our case, we're looking at the digital footprint of an organisation. Mm-hmm. We're looking for places in that digital footprint where there is a risky behaviour, be it an exposed credential or an exposed device or something that might pose a risk, and then we're rating it on a high, medium or low sort of scale. And then that provides us a really good start for a training set that we can then apply over an unknown data set to then extract value from it.
Interesting. Is it... Sorry.
Yeah, I'll give you another example. So it's not necessarily the use of machine learning or artificial intelligence to be more effective at fighting financial crime. It's an example where, by being more efficient, we free up our human resources to do real investigations on financial crime matters. So at Standard Chartered Bank, we've deployed artificial intelligence through a really fantastic vendor named Silent8, which is out of Singapore. And we are using artificial intelligence in our name screening process. So every bank is screening all their beneficial owners and their connected parties to see if it's a PEP, a sanctioned party, etc. And you're doing this on a daily basis to keep up with changes in the PEP list or the sanctions list. Very, very time-consuming process, which also generates 99.9% false positives. Variation in the name of your client versus the name on the sanctions list, different date of birth of your client versus the name on the sanctions list, etc. Analysts for years have been going through a process to identify what's a false positive by comparing data fields between the real bad guy and the...
So a name that is similarly spelled or...
Exactly. So we've been working now for well over a year to train the machine to understand that that's a false positive. And we're now using that in our name screening process so that our analysts can devote themselves to true hits and things that add more value. But getting back to your question about data, it won't work if you don't have standardized data, if the date of birth isn't always in the same field, or if the month of birth and the year of birth are in different fields, in different systems. You can't rely then on machine learning. So you can't, the very first start for using any machine learning is standardizing your data. It can be quite complicated in global banks where you have hundreds of systems. So anyone embarking on this journey, you need to have the right people that understand data. You have to invest in standardizing your data. It's a significant undertaking, in addition to all the work to then train the machine. And even when you do get to a place where you're able to deploy it, you won't be able to deploy it over 100% of your databases because it can be quite challenging to standardize all that data.
I think we're butting up against our deadline, so I don't know if you have any final thoughts you think is worth leaving people with. What are the challenges that might be coming up in the coming months?
So I think...
Just briefly, of course.
You've got to think about, as we innovate, we've got to take the benefits from that, but we also must always consider the security risks around it and the fraud risks around it. So it's not something you can do after the fact. It's something you should think as you're thinking about new ways of doing things, bake it into the process. That's the best place to do it.
Anything to add?
I think talking about financial crime can sometimes be really daunting and, not as positive as other topics, but we've really seen significant progress in just in the past couple of months in building new ways of working. Just yesterday, Germany announced a new financial information sharing partnership. In the Netherlands, they're rolling out consolidated monitoring across, I believe, 5 banks. So there's real progress being made to find better ways to really fight financial crime.
Good. Well, thank you so much to all 3 of my panelists.